Global financial crisis 2008 was a catastrophic event that affected the global economy and left many people struggling to make ends meet. The crisis began with the housing market in the United States. In the early 2000s, there was a housing bubble which was caused by banks and other lenders issuing mortgages to people who couldn't afford them. This led to a surge in demand for housing, which caused prices to rise rapidly. As a result, many people took out large loans to buy houses that they couldn't afford. To keep up with the demand for mortgages, banks and other lenders started offering subprime mortgages. These loans were given to people with poor credit or low incomes, who were considered high-risk borrowers. In many cases, the lenders didn't fully disclose the terms and conditions of the loans, which led to many people signing up for mortgages that they couldn't afford. The securitization of mortgages happened when the banks and lenders packaged up these mortgages and sold them to investors as securities. This process is called securitization. These securities were then bought and sold on the financial markets, and they were seen as a safe investment because they were backed by the housing market. The housing market crashed as more and more people defaulted on their mortgages. The housing market started to crash. The value of the securities that were backed by these mortgages plummeted, and many investors lost a lot of money. This led to a chain reaction that affected the entire financial system. The collapse of major financial institutions resulted as the crisis deepened. Major financial institutions like Lehman Brothers and Bear Stearns collapsed. This caused panic in the financial markets, and many investors pulled their money out of the stock market and other investments. The credit markets froze up, making it difficult for businesses and individuals to borrow money. The government responded to prevent a total collapse of the financial system. The U.S. government stepped in with a bailout plan. The plan involved injecting billions of dollars into the banking system to help stabilize it. The Federal Reserve also lowered interest rates to make it easier for people to borrow money. The aftermath of the financial crisis of 2008 had a profound impact on the global economy. Many people lost their jobs and their homes, and the recession that followed lasted for years. The crisis also led to a lot of regulatory reforms aimed at preventing a similar event from happening again in the future. The financial crisis of 2008 was a complex and far-reaching event that had a profound impact on the global economy. It was caused by a combination of factors, including the housing bubble, subprime mortgages, and the securitization of mortgages. The aftermath of the crisis led to a lot of regulatory reforms, but it also left many people struggling to recover from the economic damage that was done. Hope you liked the video. Please like and subscribe our channel for more interesting videos like this.